Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, July 12th, 2013. Well, very active week this week. Comments flying from Fed Chairman Bernanke, as well as meeting minutes from the last meeting of the FOMC, really putting some life into the dollar, putting it in on a negative tone though, and the dollar selling off quite a bit for a couple of days. So now we are looking at some changes here and a whole lot of activity. So we're going to go through everything technically, but first let's take a quick run through our day-to-day from an economic standpoint, and then a quick look at next week. Today we had the U.S. PPI come out, and it was 0.8% higher, much more than the expected 0.5% higher, and same as last month, 0.5. So really a little bit higher than expectations. However, that could be due also to some price increases in energy costs. So until we have several months there that we can say it was up or down, we're going to stick to that, because the core rate was 0.2% as expected, and pretty much in line with what we've been seeing on the core rate. That excludes the energy sector. Also in the U.S. was the preliminary University of Michigan consumer sentiment numbers that came in at 83.9. Expectations were for 85.3. Now there is kind of a revised number that comes out in 2 weeks, so we'll see how that actually comes through on the revision. Lately the revisions have been going upwards, so we could get back up to that 85 as expected. Next week we got a full docket of info coming out, starting on Monday. GDP out of China. Now expectations are for 7.7% year-over-year basis, and there are some that are calling that could be a surprise if we ended up that high, that we could end up quite a bit lower and even negative on the quarter. So there's a lot riding on that number, as well as the industrial production and retail sales for China also coming out on Monday. Both of those are expected to be status quo. Industrial production around 9.1%, and retail sales about 12.9%, same as last month. So if we get substantially weaker numbers there, it could certainly play havoc with the Australian dollar, and probably with some of the other Asian currencies as well. Also on Monday, retail sales from the U.S. 0.7 is expected, and Empire State Manufacturing Index 5.2 is expected after last month's 7.8. So if we get anything larger than that, then it'd probably be status quo, but lower than the 5.2, and that could cause the dollar to sell off a little bit. Tuesday is inflation numbers out of the UK, all the expected inflation numbers. PPI again expected to be negative. PPI input, and PPI output is supposed to show just a slight gain of 0.1%. So those are the two that everyone's going to really watch to see what happens there. Also on Tuesday is the German zoo economic sentiment, expected to come in just under 40, 39.9. So that would be a very good number for Germany. And also in Europe, for all of Europe, the zoo economic sentiment 31.8. That should be a fairly good number too, if we do indeed see that. So there'll be some volatility in the euro if we do not get up that high. In the U.S. is the CPI, pretty much expected to be 0.2% on the core rate and 0.3% on the full number. Also in the U.S., capacity utilization and industrial production. Industrial production showing just a slight rise of 0.3%, capacity utilization sticking around the 78% level. Further on in the week, on Wednesday, we get some info from the MPC in the UK as to official bank rate and purchase facility votes. So that comes from the last meeting, and the votes are expected to change. So we'll see how that comes out, geared more towards the asset facility, increasing it. Also we'll have claimant count and unemployment rate for the UK. No big expectations there. And in the US, building permits and housing starts. Building permits are expected to show a 1 million number even, and housing starts 0.95, so that has been off as of late, but looks like it's going to get back on track here now last month and then again this month. We'll see. Also, Fed Chairman Bernanke testifies both on Wednesday and on Thursday, so Wednesday will be the key there, because he's probably not going to say anything different on Thursday than what he says on Wednesday. So Wednesday will be the big day. Also, the beige book comes out on Wednesday, and that's something the Fed does look at for interest rate decisions. On Thursday, the Philly Fed manufacturing index coming out at expectations of 6.9. Last month was 12.5. This number does fluctuate quite a bit, and it can be good or bad depending on how much off of the expectations are. So if we came out at 0, that would be bad. If we came out at 10, that would be good for the dollar. So basically that's about it for the week. There isn't too much else on Friday, nothing of importance, so next Friday should actually be fairly quiet. Alright, on to the technicals here. The Euro-US dollar down about 32 pips right now today, recovering from its lows. We were down about 100 earlier, and you can see these last couple of days here is huge spikes. We ran all the way up from just about 127 and change all the way up to 132 in a matter of 2 days, and it was really within 24 hours. So it was quite the move there. Really, since we came right back down, we're going to call this area right up in here some pretty good resistance, and we're going to say that that is about it. That's about all we're going to see up in there. And if we look at the weeklies, we can see too how we can just draw this line right across here. We are stuck in this range, and more than likely we will break out to the downside, because as we look at the monthlies here, even though this month is now up, we got a lot of confusion here, and we're staying in this area here. We're really having a difficult time getting any kind of rally here, so more than likely we're going to sell off from here, probably quite vigorously once we do. The British pound against the dollar here, also you can see this 2-day run up here, and today now we're down about 81 pips, so pulling back a little bit here, and it looks like we'll probably run up to about this area here, and maybe even form this kind of a V-shaped bottom. It's a possibility. We'll have to see how we come in on Monday's session, but overall looks like this will be the resistance point up here around that 152.50 to 153 area, and at that point it's going to have to make a decision as to whether we're going to go higher or lower. But if we look out here on the weeklies, really all we're doing is bouncing. We came down to the support area very nicely, just around the lower 148s, and we've bounced up again from there, so there seems to be some pretty good buying interest there. However, if we jump out to the monthlies, we can see that really we're having a difficult time here. It is possible for us to turn around at this point, but we're still having a lot of difficulty every time we get up to that trend line, so technically speaking we should sell off more. We should complete the pattern, at least go down to the lower 142s. That would complete the whole sell-off pattern, double bottom this sell-off from way back in 2008. US dollar against the Swiss franc. Right now we're down about 9 pips. 2 days, really huge move here, down about 400 pips, and we're kind of recovering a little bit today, but not really. At least it's stabilizing. We got very close to this trend line down here, so really expect us to get down into there again. We'll probably test that level, just about the 94 area, and then bounce from there. On the weeklies though, we're eclipsing last week, which is really not a very good sign. It's looking really good here. Earlier in the week we were going to go up, make some new highs, and we failed, so that's not a very good sign technically. On the monthlies we were up above that trend line again once more, and now on the monthlies we're well below it, so we'll have to see how we close out the month, but it's going to be very important for us to close above that level and really close significantly above it. I'd like to see it around 103 for the end of July. US dollar against the Japanese yen. down about 40 pips right now, just under 100. Really not doing too bad in comparison to the other crosses. We did sell off from about 102 area 101.50. So we're down quite a bit, but not nearly as much as the rest of the crosses with the dollar. So here we are, bouncing back a little bit today, showing some pretty good strength. And on the weeklies also, we're still riding though on the south end of this trend line, so would like to see it close up above that. And also we're kind of forming what could be a possibility of this kind of a V shape here. So once we get back up there and then close up above that, really would expect us to rally substantially from there. Now on the monthlies it still looks good. We are up slightly for the month, but overall really looking for us to finish out the month on a fairly good note, and we still got a good solid 2 weeks here, so a lot can happen. Euro Swiss down for the second day in a row here, down about 41, back down to the mid 123s, but overall still looking really good. We sell off here maybe for a couple more days, and then we rally back up, get back up above that 124, 125 level, and we could close up in there. That would be very positive. Also on the weeklies here, we can see this week not ending up on a very good note, but we still have this kind of curvature starting here on the bottom. So we got one curve down here, one here, and in this one, the one that we're in right now, is a little higher than the last one. So overall, that's a positive note technically. Again, we got to wait to see how we finish out here this week, but it really looks like we'll probably finish negatively, and 1 week doesn't make the trend. So as long as next week is up and we are up above this week's highs, then it'll be very positive. Euro yen pretty much stuck in a range here, really not experiencing that huge sell-off because it's not dollar oriented, so really didn't expect to see it happen, and it didn't. Just under the 130 area, looking very good longer term here. Still looking like we're consolidating a little bit, trying to work its way back up. On the weeklies we have kind of turned the corner, but we're not doing it with a lot of conviction. So longer term still looks good though. We're just having a slight pullback here, or correction. So maybe this month we pull back a little bit more and consolidate, and then next month we rally back up. So longer term still looks really good. US dollar against the Canadian here real quick. Sold off very vigorously. We had a 3-day sell-off, and then or 2-day sell-off, and then it really broke when Bernanke and the minutes were released. So really we sold off very well, but we're really seeing a very good pattern here, because here we continue to work our way up, and each of these corrections are a little bit higher. So this one coming in just a little bit higher also. Stochastic starting to turn around, really looks very good, short term as well as long term. We can see that here a little bit more also in the weeklies, how it's really starting to curve and really gain some momentum here. Would like to see it even more now. This week also, I think it's Thursday, this coming week is the Bank of Canada's meeting, so we'll see what happens with that. If they do anything that'll push the Canadian lower against the dollar. So it really looks good though longer term. Australian dollar against the US, it did rally, ran all the way up above 93 at one point in Thursday's session, and then has since come down, and we're our closing, looks like we're going to have a new closing low today. We're down about 137 right now, so really looks quite bearish at this point. If we do close at this level for this week, that's going to be very bearish. If we look at the weeklies, we can see how large spike up. We're still staying within that very, very tight channel. We could very easily sell off next week and get down around 89, upper 88s. And if we look on the monthlies, well, we're just got a straight down going, very much like we had back here. So we could be at 80 very easily here within a few weeks. Certainly no doubt about that. That is it for today. Questions, comments, grab me. If you're not a member of FX Addicts, please stop by. We do offer a 7-day free trial, and you can stop by at any time and feel free to ask me any questions. You can email me, tim at fxaddicts.com, and we'll be more than happy to talk to you about currencies, interest rates, or economics for that matter. Thank you.